The stock market just had one of its worst weeks in years. Every headline you see says the same thing. Don't panic. Stay the course. It'll bounce back. But here's what those headlines aren't telling you. This crash is structurally different from every crash you've seen in the last 20 years. And if you don't understand WHY, you could make exactly the wrong move with your money at exactly the wrong time. By the end of this video, you'll understand what's actually happening, why experts are scared in ways they're not saying out loud, and the 3 things you need to think about right now. Let's get into it. The surface story vs. the real story. On the surface, the story everyone is telling you is this: tariffs caused uncertainty, markets got nervous, we dipped, but it'll recover like it always does. That's the safe version. And it might even be partly true. But here's the problem with that story. It ignores 3 things happening at the same time that have never happened together before. Subscribe to Economy Explained, because in times like these, understanding money isn't optional, it's survival. Number 1. A global trade war actively escalating between the world's 2 largest economies. Number 2. The Federal Reserve completely boxed in, unable to cut rates to rescue the market because inflation is still too high. Number 3. Consumer confidence at its lowest point since March 2020. You remember what happened in March 2020? Each of those alone would be manageable. Together they create something economists call a doom loop, where each problem makes every other problem worse. Let me break down the Fed trap, because this is the part that really should scare you. Every time the market has crashed in the last 15 years, 2008, 2018, 2020, the Federal Reserve rode to the rescue. They cut interest rates, they made borrowing cheap, money flooded back into stocks, and markets recovered. That playbook is gone right now. Why? Because inflation is still sitting above where the Fed wants it. If they cut rates while prices are still rising, they pour gasoline on the inflation fire. Your groceries get more expensive. Your rent gets more expensive. The dollar buys less. So the Fed is sitting there watching the market fall, knowing they have a fire extinguisher in their hand, but using it would start a different, arguably worse fire. They're trapped. The market is on its own. And most people watching their 401k go red have no idea that the usual safety net isn't there. Is this a recession or a depression? Pattern interrupt. Now, let me say something that's going to sound extreme, but I want you to actually think about it. Right now on Reddit, in YouTube comments, in conversations across the country, millions of Americans are saying the same thing. We're not heading toward a recession. We've already been in one for years. And here's the uncomfortable truth. They're not completely wrong. The technical definition of a recession is 2 consecutive quarters of negative GDP growth. By that measure, we're not officially there yet. But the lived experience of millions of Americans, rising costs, stagnant wages, depleted savings, that's been a slow-motion recession for working people since at least 2022. What's happening now is the financial system is starting to feel what Main Street has already been living. And if this market crash triggers what economists call a demand collapse, where people stop spending, businesses start cutting jobs, unemployment rises, then the technical recession everyone's debating becomes something even harder to recover from. Quick pause if this is the first time someone's actually explained this to you in plain English. That's exactly what this channel is for. Subscribe, because the next video covers what the Fed's impossible choice means specifically for your mortgage and savings. Back to it. What makes this crash different? The 3 signals. So here's what separates this crash from the ones you've seen before. I want to give you 3 signals that professional investors are watching that you almost certainly aren't hearing about. Signal number 1, bond market behavior. In a normal crash, investors flee stocks and buy U.S. Treasury bonds. That's the safe haven trade. But right now, bonds are also selling off. So that means investors aren't just scared of stocks. They're scared of us debt itself. That's almost never happened before. When it does, it means the fear is systemic, not just a sector correction. Signal number 2, the dollar is weakening. Normally, when global uncertainty rises, money piles into the US dollar because it's the world's reserve currency. Right now, the dollar is losing strength. That tells you international investors are reevaluating their trust in the US economic system. That's a massive shift, and it's happening quietly. Signal number 3, gold is at all-time highs. When gold spikes, it's the market's fear gauge going off. People buy gold when they don't trust currencies, governments, or financial systems. Gold isn't just up, it's at record levels. It's not a minor signal. That's a 5-alarm warning. What you should actually do practical takeaways. Okay, so what do you do with all of this? I want to be clear. This is not financial advice. I'm an economy educator, not your financial advisor. But here's how I'd think about it. First, don't panic sell. Historically, the people who panic sell during crashes lock in their losses and miss the recovery. Even in the Great Depression, markets eventually recovered. The question is whether you can afford to wait. Second, understand your time horizon. If you won't need this money for 10+ years, a market crash is genuinely a buying opportunity. If you need the money in 1, 2, 3 years, it's a different conversation, and you should talk to a financial advisor. Third, build a cash cushion. In uncertain times, cash is king. Not because cash doesn't inflate, it does, but because having 3 to 6 months of expenses in cash means you never have to sell investments. At the worst possible time to cover an emergency. Fourth, stay educated. The biggest financial mistakes people make happen when they're operating on fear and incomplete information. The more you understand the system, the better every decision you make becomes. That's why this channel exists. To make sure you understand what's actually happening in plain English, no jargon, no agenda. The crash that nobody is talking about honestly is already here. The question is what you do next. Subscribe to Economy Explained because in times like these, understanding money isn't optional. It's survival. My next video breaks down exactly what happens to your mortgage, your credit card rate, and your savings if the Fed is forced to make a choice. You don't want to miss it.